All right, welcome back, traders. John Caruso here for the afternoon of October 4th. We're going to do a quick futures market update for you guys here today. First of all, we did see some data come out this morning. We did see the ADP employment number, which is a preview of the non-farm payrolls number on Friday, come in light. 89,000 jobs were created last month, according to that survey. Historically, not a very good indicator for the non-farm payrolls number. But very, very light nonetheless. The market was expecting approximately 150,000. So that is light. We did also see the ISM non-manufacturing or ISM services come out here this morning. 53.6 which was a slowdown from the previous reading of 54.5, but still hanging above that 50 mark, which would still indicate expansion in the services sector. So jumping over the chart here, we got the S&P 500 up 42.89. We are up about 57 basis points on the day, 24 points. Trying to make a little bit of a comeback here. As we have it kind of drawn in here, first let's take a step back and take a look at over here. This was the peak that we saw back in July. We did highlight several times in the last few videos that August to October was going to pose some severe downside risks, we thought, for the market. And of course, after that July high, that we saw that key reversal on the chart, we did see the breakdown in the market back along approximately 43.50. We did regather our footing and retest that 78.6. Failed again, another retest of the 78.6, and then the key outside day down reversal, and the market hasn't looked back since. So where do we go from here? As you can see how I have it drawn in here, I do actually believe that we could see a couple days of chop or maybe a week worth of chop that comes back into this trend line here, the downside of that trend line, up around 4,400. We're going to use a round number, but more specifically, 43.85 to about 43.15 is the zone where we think you want to start resetting some of those sell side positions. So if you haven't already booked gains from this move down, start looking at taking some chips off the table, but keeping a core short position in there because, of course, we could be wrong on this analysis that we do get this choppy bounce that takes us back into 4,400, gives you another opportunity to sell for a larger correction back down into about 4,200 to potentially 41.88 is how we have it drawn in here. That would complete a 10% correction for the stock market this year. And then, of course, into the end of the year, November, December, we do actually have a more favorable period drawn in here. However, we think there's going to be a lot of risk coming once again out into 2024. So that's a look at the S&P 500. I still largely remain bearish from here. We could see a little near-term chop. You got to remember, there's a lot of factors at play right now. Obviously, there's seasonality factors. But if you take a look at some of the more macro-based factors, we are starting to see signs of a slowing economy. You got to remember a lot of those excess savings that were built up during COVID and the pandemic that have largely kept the floor under consumer spending. A lot of those funds have been depleted. You're seeing credit card delinquencies on the rise, and personal savings is continuing to collapse right now. And then, of course, you get into the bond market, rising interest rates, rising U.S. dollar. You're seeing less lending going to small businesses, slowdown in the housing market right now. All those factors are going to contribute to a tighter consumer, we think, in coming weeks ahead, in coming quarters ahead, we should actually say. So that is a look at the S&P 500. We're going to jump over, take a look at the gold market. This is a market that we've actually had wrong. That's a monthly. We're going to take a look at this here. We were actually encouraged back in here. We had just largely kind of settled in a sideways range. We were encouraged by the rapid rise in interest rates, the rapid rise in the U.S. dollar. I was very encouraged that gold was able to hold in there as well as it did. But then you can see last Friday, we did suffer a breakdown on the charts, and we haven't looked back. We've suffered about a $100 drop in the price of gold over the last 6 or 7 trading sessions. So we are oversold down in here. However, there is no clear sign of a bottom just yet. The next logical place of support comes in down around 1815, which also happens to be my trend line. If we're to break under 1815, then you got to be very, very careful about adding exposure on the long side in the gold market as long as we are below that 1815 area. But we haven't reached that level yet. We haven't tested it quite yet. But judging by today's price action, that might not be too far behind. So we do have a lot of data coming down the road here. Of course, tomorrow we got jobless claims, and of course we're going to follow that up with non-farm payrolls on Friday. We're going to be keeping our eyes glued to the interest rate markets and of course the U.S. dollar from here for signs of near-term direction in the gold market. But right now, undeniably, the inertia in this trade is on the downside. If we do happen to see gold prices try to pop back in here, maybe retrace back into about 1870 to 1880, I don't think that these rallies would hold, and you'd probably look for another breakdown on the downside in the gold market. We still remain longer-term bulls on gold, just as long as it holds our trend at 1815. But right now, gold has suffered a severe breakdown on the charts, as you can clearly see. So jumping over quickly, I'll look at the dollar. Dollar has seen this upside extension since basically the beginning of July. A lot of people had written the dollar off for basically dead when we did see this trend break in here. Dropped as low as 99.57 in here, and we haven't looked back. We stopped, reversed, pivoted, haven't looked back, and this market clearly has had this nice steady uptrend develop on the charts since the beginning of July. No clear signs of a top in here. We did get an overbought signal over the last couple of days, so we are now starting to see a little bit of a pullback in here. But I don't see any reason to believe that this market is ready to break down yet. If we were to start seeing closes below 105.73, that is when we would take a look at a potential for a breakdown in the U.S. dollar. But there's been so much inertia behind this market on the downside. When this eventually does top out, you're probably going to see that begin to slide in a straight line as well back on the downside. But right now, I don't have any signs of that happening. Dollar remains bullish trend, positive momentum, and certainly not quite not giving us an overbought signal with the pullback here today. So the dollar still very much looks like it can be bought on moves back into 106, potentially 105.80. So that's a look at the U.S. dollar. Taking a look at the crude oil market, that's been making a lot of noise here today. That's down 5.5% on the session, or $4.50. Big breakdown here. We did see the top start to form in here. We hit 95. Saw some topping action in here. And once again, like I mentioned, inertia. We had all this inertia on the upside in crude. Now are we getting that inertia on the downside? The market clearly topped in here and suffered a breakdown below this old support level of about 88.20. And it's getting hard here, hit very, very hard here today. I am getting an immediate term oversold signal in crude at the low end of the range right now, at the 50-day moving average. Can we get a little bit of a pop in here? I actually believe we will. I think the fundamentals in this market are still very, very strong. The only reason why crude oil could potentially break down back to bearish trend would be the onset of the outlook of an oncoming recession, which is certainly it's potentially in the cards in Q4, Q1, Q2 going out into next year. But right now, crude oil still. We're going to give it the benefit of the doubt in here to bounce back once again because this is a very strong tape that we're seeing in here, registering immediate term oversold. So that's a look at crude oil. We are looking for a bounce back in here in crude oil. Whether or not it can hold up and break down again, that remains to be seen, but very oversold on a 5.5% down day in crude. So that's all I have for you here today. Best of luck to everybody out here. Once again, I'm John Caruso. If you want to review any other charts, get our outlook, feel free to ping me at jcaruso@rjofutures.com. Best of luck to everybody out there. Take care.